Legal bookkeeping, an introduction of basic principles. The principle of debits and credits and the double entry system is key to your understanding of writing up the books of a law practice. Your understanding of these two aspects is very important. Let's start with the principles of debits and credits. Debits and credits are two actions of opposing nature that are relevant to the process of accounting. Simply put, debit means when money comes into the practice, and credit means when money goes out of the practice. Keep the debits on the left and the credits on the right. Next, let's look at examples of debit and credit entries from the business cash book and the trust cash book. The practice purchases office chairs for 5,000 Rand and pays for these in cash. This would be a credit entry in the business cash book as money goes out of the practice. In the next type of transaction, Mr. King pays 2,500 Rand as a deposit for a divorce matter. This would be a debit entry in the trust cash book as money comes into the practice. That, in a nutshell, is the principles of debits and credits. The double entry system. Double entry bookkeeping is a system of accounting in which every transaction has a corresponding positive and negative entry of debits and credits. Every transaction involves a debit entry in one account and a corresponding credit entry in another account. The rule to remember is debit the receiver and credit the giver. When client A pays his account, we record the transaction in two places. Thus, a double entry is created. Because client A paid his account, we debit the trust cash book. Remember, because we debit the receiver. At the same time, we create a matter ledger for client A regarding the specific matter, and that is where the second part of the transaction is entered. Here we credit the client A ledger because we credit the giver. This is how client A becomes your trust creditor. When we pay advocate B for his help in the matter, we credit the cash book and debit the client A ledger. Remember, debit the receiver and credit the giver. There are two types of cash books: business cash books for business-related transactions and trust cash books for trust-related transactions. The following is a simple exercise to enable you to familiarize yourself to how a cash book is set out. We draw up the cash book as follows. We draw a tier count, and on the left-hand side, the debit side, we write DR for debit. On the right-hand side, we write CR for credit. On the debit side, we include the following columns: date, receipt number for records of receiving money, description, who paid and for what, folio, used when you post to a ledger account as a cross-reference, and amount, reflecting the funds that were received. On the credit side, we include the following columns: date, check number for records of paying money out by check, description, what you paid for, folio, used when you post to a ledger account as a cross-reference, and amount, reflecting the monies paid out. Now you have the basic structure of a cash book. Furthermore, it is important to know that there are two types of ledgers. Firstly, the business ledger, which is for business-related transactions and also for the transfers from the trust account. Secondly, we have the trust ledger for the firm's client matters.